From the world of politics.
This is a highly industrialized, high-intensity conflict. What we're seeing in the Donbass is likely to be a much more set-piece, conventional conflict.
To the world of business.
Interest rates have got to go up, I would say a minimum, Fed interest rates, a minimum of 200 basis points from where they are now. But if the peak is out there far and we're not near it, then we're probably talking about more than 200 basis points higher.
This is Balance of Power with David Westin.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. As we come to air, there's a memorial service for Madeleine Albright, the former Secretary of State, going forward at the National Cathedral in Washington, D.C. We've already heard from President Biden. Right now, former President Clinton, who was the president when Madeleine Albright became Secretary of State, is speaking. But eventually, President Biden will be returning to the White House today, and when he does, he's going to have a full agenda in front of him, including, no doubt, what the reaction is to that growing crisis over natural gas in Europe as Russia is cutting off supplies, at least to Poland and Bulgaria. To bring us up to speed on all this, we turn now to our Washington correspondent, Anne-Marie Hordern at the White House. So, Anne-Marie, where are we?
Well, it's very complicated, and given the current crisis at hand, David, we should note President Biden, when he was giving that eulogy about the former Secretary of State Madeleine Albright, he said it wasn't lost on him that he found out about her death when he was en route to Brussels to meet with NATO leaders. And he said the reason why NATO is so strong and galvanized today is, of course, for the work that she had done when she was Secretary of State. The crisis at hand at the moment in Europe over natural gas is complicated, to say the least. You have Russia pulling the plug on Poland and Bulgaria. You have a meeting of European leaders and Ursula von der Leyen calling this blackmail and saying that companies and governments should not be paying for in rubles. That would be going against sanctions. But David, our own Bloomberg story and reporting and a scoop today is that 4 companies have actually already paid in rubles and 10 others have set up bank accounts at Gazprom Bank. So potentially what you have is Putin just starting to test the waters with Poland and Bulgaria. The real concern is who is going to be next. And everyone's eyes on Germany, of course, because at the moment, the economy minister said today, 35% of their natural gas comes from Russia.
Yeah, at the same time, I understand that Germany has said that they might be willing to move away from natural gas if it was done gradually. But what, as a practical matter, can President Biden of the United States do about this situation?
Well, when it comes to natural gas, what the president has already said, and he said this alongside Ursula von der Leyen on his trip I was with him in Brussels, is that they're going to speed up more deliveries. And we should already note there is a ton of LNG going to Europe at the moment. The U.S. is a massive producer of liquefied natural gas, but 15 BCMs would be going over. That's how much they want to ramp up. But, David, it's very tiny compared to how much that European continent needs. When it comes to Germany, that next winter, if they cannot fulfill their storage now over the summer, Europe at the moment is lucky to have weather on their side. They're going to be in a very difficult place. They are not going to be able to make it through next winter without Russian gas.
Very serious problem over there. Thank you so much to Bloomberg's Anne-Marie Hordern joining us from the White House. And for more on the situation and how this could affect the economy, we turn now to Torsten Stok. He's Apollo chief economist. Torsten, thank you so much for being with us. We want to talk about the economy more generally, but quite specifically, just picking up on Anne-Marie's reporting. How is it likely that this crisis, if I can call it that, in natural gas in Europe could affect the economy?
And this is obviously a serious issue. If you think about it, I mean, all the energy that not only, of course, Bulgaria and Poland is getting from Russia, but also, in particular, as you mentioned, Germany, now this is raising the risks to the economic outlook, certainly to the downside quite substantially. If we get a situation where there's more uncertainty about the supply of energy, it is certainly something that could be a serious risk to the overall the outlook for the European economy. Most importantly, of course, those economies that depend on natural gas from Russia, but more broadly, if there is any cutoff of supplies, it will, of course, have a quite significant negative impact. The only near-term issue, of course, is that there are inventories, both in Bulgaria and Poland, for at least another month or two of natural gas, potentially, therefore, not quote-unquote running out of energy here in the next few days, but it clearly speaks to this point that this is an escalation in terms of the downside risks to the outlook for Europe.
Which could, as I understand it, affect potentially production, manufacturing and production, but it also obviously affects prices. We're already seeing natural gas prices spiking over there, which raises the larger issue of inflation. We're seeing it's not just in the United States, although it is in the United States. And that's a mismatch, of course, between supply and demand. Coming back to the United States, how bad is that mismatch? When do you think we'll see a peaking of inflation here?
Yeah, so if I, on my Bloomberg screen, type ECFC go and I look at what the consensus expects to that great question, the consensus does expect inflation to peak in this quarter. And that's very important, but the consensus also expects inflation by the end of the year to be around 6%. So that means, depending on whether you look at headline or core, but 5-6% on both measures. And those numbers are obviously substantially above the Fed's 2% target. So the key issue for markets is that, yes, inflation is coming down, but the level of inflation, even by the end of this year, will still be significantly above the 2% target for the Fed. So the key issue as we look ahead, in particular when it comes to rates markets, is to what degree will the Fed put weight on inflation coming down, or to what degree will the Fed put weight on inflation being still significantly above the 2% target?
So you took us right to it, the Fed. We've got a big decision coming out next week. Probably not going to be the last big decision they have this year, but we have a big one next week. What should the Fed be doing right now?
So if you look at the incoming data, I mean, all the daily indicators and weekly indicators, everything from credit card users to debit card users to the number of people who travel around the country, the TSA data, also the open table data for restaurant bookings, there is just simply no evidence of a slowdown at this point. So to your question of what the likely scenario is for the Fed next week, it is probably most likely that they will continue to be hawkish. They will most likely raise rates 50 basis points. That's what the consensus expects. That's what I would expect. And I think that with that backdrop, as long as the economy is still very strong, it is just simply too early to call for the peak in rates. We simply need to see the data slow down, and we just have not seen that yet. So that's why this discussion of a hard landing or a soft landing also depends tremendously on once we begin to see the roll lower in the data, then we should be looking at the slope and the speed with which the data is beginning to come down. But we just don't know that quite yet. So that's why the Fed has been incredibly hawkish. A lot of Fed speak more recently has clearly been saying we will be hiking rates a lot. And of course, the market, if you look at your Bloomberg screen again and see what the pricing is saying, that's saying that we'll get 9 more rate hikes on top of the hike that we got in March. So the meeting next week is already set in stone. But the data and the incoming data, of course, the employment report on Friday next week is also very important. The consensus now expects 400,000. But if that does also still continue to come in strong, we will still have a fairly hawkish message coming out from the Fed still over the coming months.
Which takes us to the hard landing, soft landing question everyone's asking these days. And to inform that, we have the GDP numbers coming out tomorrow that, as I understand, are projected to be, the survey is at 1.0% right now on the Bloomberg. At the same time, the consumers are still pretty strong, still spending pretty well, and the household balance sheets are holding up, are they not?
That's exactly right. So that's why the number tomorrow is quite misleading. I mean, we are coming out of COVID. More people are flying on airplanes. More people are staying at hotels. More people are eating out at restaurants. So we should continue to see consumption growth be steadily accelerating over the next several quarters. Likewise, CapEx spending, meaning spending for companies on construction and on equipment and software, should also expect it to be quite strong over the next several quarters. There is a little technical issue almost tomorrow in the GDP data that inventories and net exports are a drag in the first quarter on the growth picture. But that 1% number, as you mentioned, that is expected by the consensus, will be only temporary. And then we should expect to see GDP growth continue to be strong. In some sense, the Fed communication is also telling you that this is just a temporary slowdown, because otherwise the Fed wouldn't continue to be as hawkish as they are at the moment.
Torsten, just one more on rates, if I could. Obviously, there's going to be a fair amount of rate increases from the Fed. At the same time, to some extent, the market's already done some of the work for the Fed already. We saw the 10-year yield really spike up. It come down a little bit in the last day or so, but still, it's up there more elevated. We talked with Alan Blinder yesterday. He said back when he was at the Fed, it was a different story, that the markets are doing a lot more work for the Fed. How much further do you think the 10-year yield is likely to go?
Yeah, so the one way of answering that question is to look at the broader concept of financial conditions financial conditions is that you throw into the kitchen sink the S&P 500, the investment grade credit spread, the high yield credit spread, and the level of short rates and long rates. And with principal components of statistical analysis, you take out the common variation that these financial variables have. And then you try to look at how correlated are they with GDP. And if you look at those indicators, including the measures of financial conditions from the Kansas City Fed, the St. Louis Fed, the Chicago Fed, they actually still show that financial conditions are still relatively easy. So it's true when Blinder is saying that the market is doing some of the work. But if you look at the incoming data, and again, with the consensus for Friday next week, expecting a quite strong employment report with the unemployment rate still at 3.6 and 400,000 in job creation, that's still not telling us that the economy is slowing down. And remember, the Fed looks out of the window and sees inflation is 8.5 at the moment, and inflation should be 2 according to the mandate. That tells the Fed that we got to tighten financial conditions even more to get inflation to come down. So it's true that some of the work has been done by the market in terms of tightening financial conditions. But as Alan Blinder also said yesterday, we should expect in markets that rates will continue to move higher.
Torsten, it's always great to have you here. Thank you so much for your time. That's Torsten Stok of Apollo. Coming up, China deals with COVID at home and being caught between Russia and the United States abroad. We talk with former U.S. Ambassador to China, Gary Locke. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. We want to keep you up to date with news from around the world, and so we go now to Mark Crumpton with The First Word.
David, thank you. Germany says it will continue to pay for Russian gas in euros or dollars, even after Russia cut off flows to Poland and Bulgaria for their refusal to pay in rubles. The move has sent European natural gas prices soaring. European Commission President Ursula von der Leyen is calling Russia's gas cutoffs blackmail and says the EU will respond. It will be swift and coordinated. Bloomberg Green convened top climate leaders to work on solutions to shape the future of our planet. At the summit, White House National Climate Advisor Gina McCarthy told Bloomberg how President Biden believes his climate agenda fits in with the war in Ukraine.
His belief is, and he stated it every single time that he's talked about oil and gas prices, is that our only way to have independence, our only way to have security against challenges that dictators like Putin present is to actually grab that clean energy future. That is the only way we're going to make this work.
Early in his term, President Biden vowed to cut the carbon emissions of the world's second largest emitter in half by 2030. Current and former world leaders have gathered in Washington to pay their respects to the late Madeleine Albright. Led by President Biden and former Presidents Obama and Clinton, about 1,400 mourners have packed Washington's National Cathedral to celebrate the life of the first female U.S. Secretary of State. Madeleine Albright died last month at the age of 84. In China, there are signs that authorities are starting to bring 2 major coronavirus outbreaks under control. Shanghai has hinted that lockdown measures may be eased as infections dropped to a 3-week low. In Beijing, the number of cases has stabilized. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. I want to continue on that story now about China and the lockdown for COVID, and we turn to somebody who knows China terribly well. He's Gary Locke. He's the former U.S. Ambassador to China. Earlier, Ambassador Locke served as the U.S. Secretary of Commerce, and before that as governor of his home state of Washington. So, Mr. Ambassador, thank you so much for being back with us. First of all, let me ask you maybe the most obvious question. How good are the data we're getting out of China to know exactly how extensive the lockdown is?
Well, thank you very much. It's a pleasure to be on your show. Well, we are getting good information. We have press, Western press on the ground living in Shanghai and Beijing, and they're certainly reporting the effects of the lockdown. And we have so many American citizens and expats and people from around the world who are obviously affected by this and reporting exactly what's going on. Things are beginning to ease both in Shanghai and in Beijing. But the question is this policy of lockdowns effective? I mean, anytime there's a single case of COVID detected in any of these cities in China, the Chinese authorities impose lockdowns first by huge neighborhoods. And when I talk about neighborhoods, we're talking about neighborhoods of 4 or 5 million people, and then expanding across the entire city. It will be impossible to prevent a reoccurrence of a single case of COVID in any of the cities in China. And so if this policy continues, this is going to wreak havoc on the people, the residents of China in these cities, and certainly the businesses and the ability of the Chinese people to maintain a livelihood. How will they work? How will they get income? How can they go shopping? How can they even go make doctor's appointments and so forth? How will the kids go to school? There is a growing concern, resentment, backlash among the Chinese people over this very strict policy, which it has to change, quite frankly.
Well, that's what I want to ask about exactly, Ambassador Locke. Has to change. At the same time, can it change? Obviously, President Xi has a tough time. He's really dislocating millions of lives over there, and his economy is not doing terribly well because of it. But he's also got a plenum coming up at the end of the year, maybe in November or so, where he's seeking a third term. Does he have the political option right now of saying, you know what, I was mistaken, we're not going to have a zero COVID policy?
Well, they have the ability to change on a dime. And it's a very top-down government, and they can send those orders out, and they can, justify it and on the grounds of improving science, improving detection methods, et cetera, et cetera. So the Chinese people would welcome any change in this policy, and there's nobody challenging him for his next term and for the next several years in office. So quite frankly, he can do what he wants. He is doing what he wants. But this policy is going to hurt the Chinese economy. It's going to hurt the citizens of China. And it is creating a lot of resentment.
And there are some substantial geopolitical issues pending as well. As I say, China is to some extent caught between Russia on the one hand, their good friend, and the United States, and for that matter, NATO countries on the other. I wonder if there's anything that you can see the United States could do to urge President Xi to give us more active support in bringing pressure to bear on Russia to end what's going on in Ukraine.
Well, China is a very close ally with Russia. And of course, they established diplomatic relations and closer economic ties with the West because many decades ago, they wanted to be a little bit more distant, a little bit more free and independent of Russia. But China is very upset with the policies of the West, the United States, the sanctions, restrictions on exports to China, and even restrictions on Chinese exports to the United States. And so they don't like the world order where the rules have been set by the United States and the West. They feel that, hey, they're a mature country now. They're part of the club, and they should have a say in how the rules of the club, the economic club, the political club are set. Nonetheless, they are very, very wary of getting too close to Russia. They depend all those jobs in China depend on close economic ties with the West. So I think what you're going to see is that China will not send military aid to Russia. They are publicly saying they support the concerns, the protests of Russia. They're blaming, they're mouthing the Russian line that the invasion was necessitated by the actions of NATO and the United States coming too close to the borders of Russia. But what's interesting is that the people of China are seeing the images of all the devastation, the humanitarian toll, the death and the destruction in Ukraine at the hands of the Russians. And so while China is saying this is really a defensive measure by Russia, the people of China are beginning to wise up and saying, this seems an overreaction by Russia if all they're concerned about is NATO forces getting too close to the borders of Russia. And many of the citizens over the internet, although it's censored, are trying to push back and raise questions. What's interesting, though, is that China, while not sending military aid to Russia, is at least calling for peace and negotiation. Of course, China really has no role to play. They're not going to convene peace talks or anything like that. But at least to the world stage, they're trying to, call for peace, stability, siding with Russia, publicly, diplomatically, but at the same time not providing military assistance to Russia.
It's very helpful, Mr. Ambassador. Thank you so much for being with us. That's Ambassador Gary Locke, former U.S. Ambassador to China. Coming up here, the U.S. Attorney lays out the criminal case against Bill Wong coming out of the Archegos collapse. Bloomberg's Greg Farrell is here to take us through that case. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. A really big development in the Southern District of New York today in southern Manhattan as the U.S. Attorney brought an indictment, a criminal indictment against Bill Wong, the former head of Archegos, which fell apart, really alleging a criminal fraud in securities violations. We welcome now Greg Farrell, who covers investigations and enforcement for Bloomberg and really knows this case terribly well. So, Greg, I'll confess, I went and read the 59-page indictment, and it read like something between a screenplay for a Netflix sitcom and something a series and something that we might see Netflix and let's say Ludlum novel.
Yes,
it reads really well.
And maybe it should be on Viacom, CBS, or Discovery.
Yeah.
Bill Wang got too in deep on. Anyway, yes, this has been only 13 months after the historic collapse of Archegos. The U.S. Attorney's Office has made 11 criminal charges: racketeering, securities fraud, and market manipulation against Bill Wang and Halligan, his CFO. Two of the individuals, the case is bolstered by the fact that two subordinates who essentially misled a number of banks like Goldman Sachs and Morgan Stanley about Bill Wang's portfolio have pleaded guilty and are cooperating. So you've got a couple of cooperators at the senior level of Archegos, helping out the government against Bill Wang.
Also, Greg, it struck me that usually you have a tough time getting people to really turn state's evidence. This time, some of the major banks that are named in this might be eager to, because it sort of lets them off the hook. They weren't just sloppy.
Absolutely. This is, I'd say, a good day for the banks, several of whom lost billions of dollars. But this gives them real support in their argument that they were, deceived by a bad actor. Because up until now, there's an argument, but the banks should have known better. This is heavy evidence in favor of, the banks being able to say, no, this was not our fault. So yes, I'm sure they're very positive on this.
Yeah. Now the next question is bail and things like that, right?
Yes. So that's to be sorted out. I'm not sure. I wasn't able to hear the hearing if there's an arraignment today. But yeah, there's a question: a guy with this kind of wealth, whether or not he's going to be released on recognizance.
Thank you so much, Greg. Really appreciate your reporting on that. That's Bloomberg's Greg Farrell. Coming up, we're going to talk with Senator Rick Scott, Republican of Florida. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. I want to keep you up to date with news from all around the world. And for that, we turn to Mark Crumpton here with the first word.
David, thank you. Russia has exchanged jailed American Trevor Reed for a Russian man, a pilot, held in a U.S. prison. The former Marine was serving 9 years after being convicted in 2020 of assaulting 2 police officers. He was swapped for Konstantin Yaroshenko, a pilot jailed in 2011 for conspiracy to smuggle cocaine into the United States. It was a rare example of cooperation between the two countries amid the confrontation over Moscow's war in Ukraine. A senior aide on Capitol Hill tells Bloomberg that House Speaker Nancy Pelosi and Senate Majority Leader Chuck Schumer met Tuesday to talk about a bill to help lower gas prices. Schumer has been talking about beefing up the Federal Trade Commission's ability to end gas price manipulation. Leaders want to see a bill done by the end of May, but they'd need Republican votes in the Senate. House Republicans rallied around GOP leader Kevin McCarthy during their first in-person meeting since recordings surfaced of him considering telling then-President Trump he should resign. The audio was recorded in the days after a mob of Trump supporters stormed the U.S. Capitol on January 6th of 2021. At the end of today's meeting, McCarthy received a standing ovation from most of the Republicans in the room. The panel investigating the riot says it will ask McCarthy to reconsider his refusal to testify. The Brisbane 2032 Organizing Committee held its first board meeting today. The group included an International Olympic Committee official, political leaders, and former athletes. The Australian bid, which includes a venue in neighboring Gold Coast, was picked by the IOC last year for the 2032 Summer Olympics and Paralympics. Australia has hosted the Olympics twice. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Well, Ukraine remains very much in the news these days as the war continues to rage in the Donbas region and the number of refugees continues to mount. And now we have Russia opening perhaps a new front in the war by cutting off gas supplies to Poland and to Bulgaria. We welcome now someone who's just returned from the region. He's Republican Senator Rystad of Florida, who visited Lithuania, Germany, and Poland. So, Senator, thank you so much for being with us. First, most important perhaps, tell us what you learned.
Well, first off, I met with NATO military leaders and U.S. military leaders in Germany, and they're absolutely committed to do everything they can to provide all lethal weapons they can. You know, you're always waiting on the elected leaders in each of these countries to make sure they're allowed to do it. But our military, NATO military, they're absolutely committed to, one, get lethal aid to Ukraine and be ready if Putin decides to invade a NATO country. Number two, in Poland, you should really, really, really respect what the Polish citizens are doing, what the Polish government is doing. You don't have these refugees, and there's millions of them now, in refugee camps or in homes. People have opened up their homes all across this country. They've welcomed them. The government has said you can go on our safety net programs until you get to go back to your home country. We laid a wreath commemorating what happened in the Holocaust in Warsaw with the American ambassador to Poland. And then I went to Lithuania, where I saw American troops ready in case Russia decides to invade Lithuania. And I met with the president and other elected leaders. They're very focused on America being their partner. They know that Communist China is not their friend, and they know that the Castro regime needs to be held accountable. So it was a great trip. Putin's a thug. He's a murderous thug. We've got to do everything we can to help Ukraine win this war, and Russia troops go back to Russia with their tail between their legs.
And part of that effort, in all likelihood, is trying to support the Europeans in bringing pressure to bear on Moscow. As you know, over the last 24 hours, some of the biggest news was Russia cutting off those gas supplies to Poland and Bulgaria with potential further cutoffs. Is there anything the United States can do? I mean, I remember, not necessarily because I remember it specifically, but I certainly read about what President Kennedy did back in 1961 with respect to Berlin and airlifting and supplies. Is there any equivalent to that the U.S. could do to help on natural gas?
Well, I think the big thing is we've got to do everything we can to make sure we're a major producer. We've got to, one, make sure we're strong, so we've got to become energy independent. And number two, we've got to put ourselves in a position that we have enough, so much fuel, so much oil and gas that we can ship it to our allies in Europe. And anywhere around the world that needs our support. We've got to make sure we're strong first so we can help our allies. And that's one thing why we can't be killing the Keystone Pipeline. We've got to allow drilling on federal lands. We've got to get these permits going so we get more oil and gas drilled in this country, safely, of course, so we can help our allies.
Is there a potential silver lining here in this sense that over the longer term, perhaps Europe would actually be weaned off of Russian gas in the long term?
Oh, absolutely, David. Lithuania understands. Poland understands you have to do that now. They know that Russia's not their friend. So smart countries are doing it. Germany is learning that they have to do it. Unfortunately, you've seen that their electric rates are up so much, gas prices are up so much. So it's going to happen. And you can see, Putin's a thug. He's a bully. He's somebody that's willing to kill women and children, and now he's willing to hold people hostage for fuel. So when we think about this, who would have thought Putin was different, or she's different? She's going to do the same thing in China. If we're dependent on China or Russia or Iran or any of these bad countries, their governments, for anything, we're foolish. Any country's foolish.
Senator, I'd like to turn to politics if we could. We obviously have a midterm election coming up in November. You have a leadership position in helping the Republicans, particularly in the Senate, try to take back a majority. And I wonder about the strategy there. Obviously, issues such as inflation and the border and crime will loom large. But it's a long time until November. We don't know where those issues will be in November. The Democrats say you don't have an affirmative plan. You just shoot at us on our plan. What is the affirmative plan from the Republicans?
Well, first off, we have great candidates running. You're right. The Biden administration, the numbers are bad. Inflation's bad. The border being open's bad. Shutting down the Keystone Pipeline, the Afghan withdrawal. I mean, I think a lot of Republicans are going to talk about those issues because it is a referendum on the president and what the Democrats are doing. But I think in every case, we have to have a plan. I put out my own plan, but every candidate's going to put out a plan. Mine is you can go to rescueamerica.com and look at it. But every candidate has to say, this is what I'm going to do when I'm going to get to Washington. And I'm excited because I think next year we are going to have a plan and we're going to get something done.
Well, what would the Republicans, let's assume for the moment, we don't know this is going to happen, but assume the Republicans take the majority in the House and the Senate. What would be different in the country?
I think what you've got to do, we've got to get inflation under control. The way you get inflation under control is you've got to reduce taxes, you've got to reduce the size of government, you've got to reduce, you've got to make it easier to get a permit, you've got to make sure we don't have regulations we don't need. So you get businesses to expand as rapidly as we can. So as we create more competition, prices will come down. We've got to make sure we're energy independent. It's the biggest cost of most of our countries right now is they're just unbelievable increase in energy cost. So I think that's what we have to start with. We've got to start with doing those things, and then we've got to secure our border. We've got to secure a border. We've got to make sure we have the strongest military possible. So I think those are going to be the big changes that we're going to see next year. We're going to make sure our schools are focused on education, not on critical race theory. Make sure we fund our police. Those will be the things we'll be doing next year.
So, Senator, all of those things I understand and sort of expect, except for one, and that is cut taxes in order to get inflation down. Most economists say it works the other way. Lower taxes or a fiscal stimulus. Why does cutting taxes get inflation down?
I think the more you put money back in people's pockets, the more you put money back in businesses' pockets, you're going to get more competition. Here's what happened in my state. When I was governor, I walked in January 2011 with a horrible economy. We started cutting taxes, and I actually cut taxes and fees 100 times. Our revenues skyrocketed. We added 1.7 million jobs, and we didn't see high inflation because we created more competition in our state. I mean, if you want inflation to come down, you've got to do everything you can to create more competition. It starts with making sure we're energy independent, but you got to do everything you can to get more businesses to prosper. If you put more money back in people's pockets, what they're going to do is they're going to start businesses, expand businesses, and create more competition.
Senator, finally, as you know full well, Elon Musk apparently is about to buy Twitter. And one possibility, at least, is in buying Twitter. He says he wants to expand it out more, have fewer restrictions. We could see former President Trump back on Twitter. Would that be good for Republicans in the Senate race or bad?
I think having a conversation with everybody. I think Republicans ought to be the party of ideas. We ought to fight over who's got the best ideas. And so I think everybody, you get on every social platform you can and talk about what you believe in. The Americans agree with us. They want jobs. They don't want high inflation. They want their kids to get a great education, not be taught, critical race theory. They want to live in a safe community. So let's get everybody on every platform we can, talk about all the things we believe in. Let's have a fight over issues and ideas, and that's what's good for the American public.
Okay, Senator, it's always a pleasure to have you. Thank you for your time today. That's Republican Senator Rick Scott of the state of Florida. Coming up, the effect of Russia cutting off the gas on the market. We're going to talk about that with Emily McClain. She's from Rystad Energy. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We've been talking about it throughout the program, Russia's movement to cut off gas supplies to Poland, Bulgaria, and maybe going beyond that. But now we get to turn to a true expert in natural gas and the markets. She's Emily McClain, Vice President of Rystad Energy. So thank you so much for being with us. As we say, we've been talking about the geopolitics of it, the ups and downs of it, but we're not experts the way you are. What is going on with the marketplace right now? Let's start with Europe.
Sure. So the recent cutoff of gas flows between Russia and Poland and Bulgaria, really that signals the first blow and it may not be the last. There's certainly still potential risk to see this potential snowball effect. And it's important to note really that the European gas grid is extremely integrated, right? So Gazprom has made it clear that if Bulgaria and Poland take any gas from third countries, then volumes would be reduced by an equivalent amount. So with countries, being significantly impacted, if this were to happen, the fortunate piece here is that for Poland and Bulgaria, both countries have really taken efforts to prepare for this. We see that in their storage inventories. So in Poland, storage inventories are now at record high levels. So that's really been a huge plus for them. And then on top of that, Poland has new pipelines coming this year. So 2 new pipelines, one in May, as well as one in October. So the impact of the shutoff there in Poland in particular should be minimal. And the country really should, not necessarily see a huge limit or cutoff of gas supplies to their consumers. Go ahead.
My understanding is typically these countries increase their storage during the warm months to really provide for surges during the winter months. Did they have to make a choice between servicing, for example, their manufacturing industry, their businesses, or building up their inventories?
Not necessarily. I think, like I mentioned, that this has kind of already been something that Poland in particular has been planning for. They've made it very clear that they did not plan to purchase gas by Moscow's demand through rubles. And same with Bulgaria. I think really, though, the total impact that we will see on the European and global markets will be muted. But this situation could escalate very quickly if other countries or individual buyers even are cut off from Russian supplies.
Okay, let's pick one at random. I'm smiling as I say that. Germany. Isn't that the big one?
Yes, so Germany very much is up there in terms of the risk that country could see. So roughly 12.5% of piped gas into Germany is coming from Russia. So of course it would signal that the country really does need to start reconsidering ways to walk away from Russian gas supplies, and they are doing that. But really, not all countries have that readily available alternative to Russian gas. And really, since infrastructure improvements and build outs of infrastructure take time, as well as significant investments, some countries could really struggle, right, in the short term to replace any drop in supply.
So perhaps a muted response in Europe, at least for the short, medium term. What effect, if any, is it having on the U.S. natural gas market?
Right. So I've been getting that question a lot. And I think it's important to start here by mentioning that the U.S. is still very much, in terms of our pricing and the Henry Hub in particular, it's very much disconnected from global prices like those of TTF, the Dutch TTF, and the JKM Asia spot price. What we saw today with TTF prices jumping to $40 per MMBTU, I think it's important to remember that TTF was trading at $100 back in March, and that was prior to the war, and that was over concerns of these supply disruptions. Those concerns haven't really gone away, but they have really been able to see a bit of a taming in that sense, because we've been kind of this whole time for the last month and a half, recognizing that this risk is here. And so the markets have really started to factor that in going forward. And so this potential escalation in price swings so far this week, it's far less than it was at the start of the war. But that doesn't mean that we won't see $100 again. But what we view here at Rystad is that we should see prices remaining around the $40 mark for quite a long time.
If that's true, does that mean that there will not be profoundly different decisions about investment?
There will be. There have already been profoundly different decisions about investment. What we are seeing, in fact, is that from the LNG side, that there's now more potential or more opportunity than ever in terms of LNG investments. And so, kind of pivoting back to the U.S. and how the U.S. fits in, we understand, the U.S. is trading a very significant differential to TTF. Prices today are still above $7. That's, extreme prices in terms of our historicals. But from a standpoint of the factors that are contributing to that, it has everything to do with the effects of this past winter, with our storage inventory levels that we're working to improve, as well as weakened supply over the winter timeframe. And as a result of all these changes in these market fundamentals, these key fundamentals, that's why we're seeing prices driving upward. There is some integration or concern over the war, but it's not what's driving to the $1-2 increase. It's really more of a domestic change. And
sorry, finally, Emily, we've seen some fundamental changes in the markets. We apparently have seen some fundamental changes in the Biden administration's attitude toward fossil fuels as well. Are investors now comfortable that they can invest in the long term in things like liquefaction facilities, given where we are with the government?
I would definitely say that we are seeing this new wave or new traction in terms of projects. We've seen projects that were originally considered speculative or ghost projects like Lake Charles actually coming back onto the table. And those projects are really seeing this situation, the ongoing crisis in Ukraine and the war in Ukraine as being an opportunity for investment, not just from building out, the LNG supplies, but also contributing to that global demand need in the long term. I think really what this, as a consequence of the war, this has really highlighted the importance of natural gas within our energy mix and the need for LNG and gas that is able to be transported globally. So I think we will see additional projects coming in, additional investment on the gas market side. And a lot of that, actually, the majority of that will come from the U.S.
Okay, Emily, really appreciate you being with us today. That was very helpful. It's Emily McClain. She's from Rystad Energy. Coming up, we're going to check in on the markets and whether they are giving some help to the Fed as it approaches its big day next week. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin, and it is time for us to check in on the markets and what they are doing today. And to help us do that, we're welcome today Taylor Riggs. She is co-anchor of Bloomberg's The Market Close. So Taylor, welcome. Good to have you here.
So fun to be invited finally back on your show, David.
Always welcome. Always welcome. So what's going on? As I said earlier in the day, not very much, but now it looks like equities are moving their way up.
Yeah, really interesting and led by technology. Of course, huge drop in technology yesterday, off about 4%, heading into some of the big earnings season. So a little bit of that reversing, but certainly not enough to make up for the big losses that we had yesterday. But really notable because sentiment heading into all of these prints has been really, really negative. Microsoft, the outlier. Of course, cloud, a huge winner, still outperforming. Alphabet, though, and Meta, we should know. Facebook, the lowest now going back since April 2020. We're going to get those earnings after the close. So really sort of a mixed picture as people are really analyzing sort of the sentiment heading into a really big week for some of these quarterly results.
So there were a lot of good results on earnings, and I guess companies got rewarded a bit, but it looked like they got dinged a lot more if they missed than they got rewarded if they beat.
That's so true. And I think sort of bringing it back to the sentiment that if you're not crushing it, for lack of a better technical term, investors just aren't comfortable with these stocks right now. And it's a little perplexing. I think I was reading a note earlier from Anurag Rana, our tech analyst over at BI. Apple's pulling in $90 billion of free cash flow this year. So whether they miss a little bit on iPhones or not, I mean, it might move the stock. But when you think long-term picture, these companies are the strongest balance sheets you've seen, and $20 billion in free cash flow alone from Amazon's perspective, just from the cloud services. So really strong numbers. Taylor,
you said we had a couple of big tech earnings out yesterday, went very different directions.
Yes.
You have Microsoft and you have Alphabet. Is there any explanation? Does it come down to consumer-facing versus back of the office? Because Microsoft was very much the latter.
Yes. And everyone, I think, will tell you, our BI analysts have spoken a lot about this. Cloud is going to outperform even in recessionary environments. So even if you're worried about a slowdown, a tech company who's looking to spend and increase their cloud exposure, not going to pull back on that, right? So that's sort of a big boost that you're getting with Microsoft. Of course, Meta, Facebook that we're looking forward to today. Hints of Alphabet yesterday, hints from Snapchat last week, right, David, about a little bit of a slowdown in some of that advertising revenue. So that really is going to be the key, similar to what we heard on YouTube YouTube with the TikTok competition. We know that that's been a big competitor as well for some of like the Instagram and even the big Facebook platform as part of Meta.
So that's a great aperitif. Looking forward to the close where we can watch you later on today. That's Bloomberg's Taylor Ricks. Thanks so much for being here. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to former federal prosecutor Robert Mintz about that Bill Wong indictment coming out of Archegos. And this is Balance of Power on Bloomberg.